Listen, for you guys that watch my channel, you know I'm not really an alarmist, I'm a realist. And let's get real here. I've been looking at the data coming from China. China's the biggest problem out there, bigger problem than Deutsche Bank, a bigger problem than Italy. Listen, there's a bunch of dominoes that are ready to fall. We got the Brexit. We got the United States' problems with debt. We've got enormous debt in the United States. But of all of the problems out there, all these dominoes that are ready to fall, including the European Union, the dissatisfaction of the people that live within the European Union is the big problem within the European Union right now. And the biggest problem out there, though, is China. But China, on its own, won't fall right away. It won't have a hard landing right away because the Chinese government, they're just in the business of borrowing more and more and more. They're not stopping. They're doing economic stimulus to hold the whole economy together. And so they're not letting it fall. And there's an enormous real estate market in China that has been built on, quite literally, they've built cities and hardly anybody's inhabiting them. They're almost like ghost cities. This is what supported the economy after the 2008 crisis. Tremendous stimulus and infrastructure programs in China, and most of it's shoddy construction, and the Chinese people have they've snatched up this real estate like it's pieces of pie at a fair. You know, just grab. They're just unreasonably investing their money back into real estate. And that real estate market in China is most of it's like condos and stuff in these big high-rise buildings that they've built out in farmers' fields. And they haven't even put roads to them. They haven't even put electricity to them. They built a skyscraper full of condos, and they've sold it at top dollar to the Chinese people as investments. And so they've built all this shoddy merchandise, shipped it to America, made themselves rich in their factories in the good times during the economic stimulus, which is basically money creation from nothing. We had 10 years of 0% interest rate policy. And it's during those years the Chinese have invested in all this real estate using money that they got from factories that they built and sold products abroad. Now, that real estate, there's nobody in it. You got these apartments and these sky-rise buildings, you know, that are exorbitantly priced extremely high. Nobody living in them, and not even the plumbing hooked up, not even the electricity hooked up, and them vacant. Now, if you can just imagine yourself right now, if you were over in China and you went into one of these buildings, and there's water dripping from the ceiling, there's no tile on the floor, the piping and plumbing's not put in, the windows are all been sealed, and the building's basically sealed and nobody in it. And of course, you know, there's no maintenance either. And basically, these Chinese people own that real estate, and they say, oh, my real estate's worth $1 million. Well, yes, right now, but I mean, what's it really worth? If it has to go marked for market, what's it really worth? I mean, it's just an empty building sitting in the middle of a field. It's not worth nothing. And so all of their capital investment, like I think it's like 60% of their economy is based on this. And of course they're going to keep it propped up as long as they can. The Chinese government's going to keep pumping money into all of this to make everything look good. Plus they fudged their GDP numbers. They say it's like 6-point-something% growth this year. That's all baloney, right? What's really going on in China? Well, I'm going to show you, and it's scary. What's really going on in China is scary. So China is a big, enormous domino ready to fall. But it's such a big, enormous domino, it needs the other dominoes to push it over. Okay, but we got the other dominoes. We got Deutsche Bank. We got the Brexit. We've got Italy. We've got the United States' economic problems. We got Canada's economic problems. We got Australia's economic problems. We've got dozens of dominoes that can push China over. But when China goes down, it's going to come down with such a thud that it's going to take the whole world economy down with it, and it's going to create what's called a global depression. I'm not talking about a global recession. I'm talking about a global depression. We are in so much trouble right now, and nobody can see it. Nobody can see what's coming. Okay, so we're going to get into the details of this right now, but I'm going to talk a little bit too about cryptocurrency and gold and silver. These assets are the only way out if you want out of dollar-denominated or fiat currencies. We all know in the end fiat currencies go to zero. They always have and they always will, ultimately. Excuse me, I broke my glasses, but what the heck? I mean, I can't get a new pair. I'm going to be heading back home pretty soon, you know. And anyway, I'm kind of waiting for my flight, you know. But I'm over in Europe, and I'm going to tell you what. I am going to stay put in America until I see what develops with this crisis that's coming. Because I'm going to tell you what, this thing might be so bad. I notice it's already actually starting to begin a little bit. I've made other trips to Europe. I fly across the Atlantic, the airplane was packed with people. Okay? People all over you, people behind you, people coughing everywhere, everything, right? And you're stuck in there in your seat. This time, I was able to lay across the seats. Open seats in the plane. It was the plane was about only 3/4 full, or maybe only 60% full. This is part of the economic slowdown. It's already starting to occur from when the last time I traveled to Europe to this time. I'm going to tell you what, six months from now, the plane, they might not even make the flight because there might not be enough passengers for it. Or there might be limited flights, and they might only be half full. This is what we're headed toward. We're headed toward a depression. So I'm going to, once I get home, I'm going to be staying in America. Now, when I say America, I'm not talking about the United States of America. I'm talking about America. And what I consider to be America is North America, which includes Canada and the United States. And, you know, I'm going to be doing my new show from there. But listen, we are facing a crisis that's been unparalleled since the 1920s, 1930s. There's been nothing like this before. And it's coming. I can't tell you exactly when it's going to start, but you can see the seeds of it growing within the world economy. But China's the biggest problem. So let's get in there and let's open up the charts and take a look at some of this stuff. Now, one of the other things I wanted to talk about is cryptocurrency and gold and silver. It's the only way out if you're in the dollar. And there's another factor about this. Everything that's connected to the dollar, the stocks you buy, they all have counterparty risk. But if you buy real gold and silver, and the real, not no exchange traded fund or anything like that, but the real Bitcoins and real Litecoins and stuff like that, and gold and silver, and you buy the real thing, there's no counterparty risk. These are the only assets out there that don't have counterparty risk. And you guys have to understand how important that is, to not have counterparty risk. Because when this system starts to fold in on itself, margin calls are going to go out. Everything's going to be sold on a mark-to-market basis. And the system's basically going to implode on itself. And then they're going to try to prop it up. And when they go to prop it up, they're going to inject money. Enormous amounts of money in. And this is going to, finally, the fiat monetary assets are going to finally, when they go to prop it back up, and they can't do anything but, there's only one or two choices for them. Either let the whole thing implode, which they can't do. They can't possibly do that. Or try to blow it back up using money, creating liquidity, which is basically a stimulus. That's the route they're going to take. They're going to take the stimulus route when this depression hits. And this is going to change this depression from a deflationary depression into a hyperinflationary depression, or what's called a crack up boom. This is not going to end pretty. it's going to end terribly bad. Take a look at Venezuela. Take a look at the whole world turning into a Venezuela. You know what I mean? This is what we're facing, and it's gonna be like I'm like a pilot going down in the airplane right now, and I'm telling the passengers and back, buckle your seatbelts. We're gonna be going through some turbulence up ahead. You know, and that's what this is. We're going to be going through a period of turbulence. So, but the biggest thing I'm going to get at right now is China. And okay, we're going to take a look first. So before we look at China, we're going to start the charts right here, and we're going to take a look at cryptocurrencies. Cryptocurrencies exploding upwards this morning. It went all the way up to $3,711 for Bitcoin. Right now it's $3,724, and we're going to take a look at silver. Silver, of course, is paused right now for the weekend, but we see a nice steady move upwards here in the price. It stopped at $15.81. These are your two assets, basically, that you can actually have in your possession. You can actually have a cryptocurrency in your possession. You can use like a paper wallet, or you can use a hardware wallet, and that's just like holding it in your hand. It's there, you know, as long as you got those keys, the private keys. And so it's the same as it's the same deal as holding physical silver in your hand. And there's no counterparty risk to this stuff. This stuff is going to explode in value when this hyperinflationary depression hits. And honest to goodness, you know, you just got to wait for it, guys. This is not going to take forever. This is coming. And when the first domino falls, all the other dominoes are going to start to fall. And let's take a look, though. This is the big one, is China. I think this is a chart right here. I wanted to show you. What this is I came across this morning. This is their manufacturing production in China. And this is, in my mind, the biggest indicator of all. Honest to gosh, guys, look at this chart of the manufacturing production. It's absolutely amazing what the decline is. We can see this chart started in January of 2018, and it ended at the end of the year, December. So this is a one-year chart, last year. So this is up-to-date information on their manufacturing. This is their manufacturing output, and honest to gosh, guys, this is scary. This is scary because it was up around 10 or 11. It was in October of 2013. It was 11.4%. They were humming right along. It's been cut in more, about cut in half, or a little bit more than cut in half. This means that their GDP, say their GDP was like 7%. This would bring it down to 3.5. It's an awful lot worse numbers, you know, than they're actually showing. They're not telling. They're keeping mum because they're keeping quiet about it all, the Chinese, and they're trying to make it look better than what it really is. But this is why they did their stimulus. They were forced to. They didn't want to do more stimulus. They had to keep all of this looking good right now. China's right now is running on stimulus. The global recession has already really begun. And the thing is I could see it when I was riding in the plane. I had two flights. In both flights, I was able to lay down across the seats. Last time I flew, about a year ago, I had to sit upright and I had people all around me, you know? And this is an indicator. I don't know why people think that this is all humming along good. It's not. China is the biggest problem out there. And when all these other dominoes fall, China's going to fall too. But they're going to fall hard. Because they're not going to be able to keep up the stimulus for much longer. They're already reaching a point where they've borrowed so much money that they're getting exhausted from money borrowing. But these numbers coming in right now from China on their factory production, down in December to 5.5. I wouldn't be surprised now if it's down in the 4s. You know, if you see the way it's descending here from 7 in January 2018, all the way down to 5.5 in December. I wouldn't be surprised if they're down in the 4s right now, or even 3s, as far as their factory production. I mean, this is scary. And so I think we only got a limited amount of months left before everything starts to actually show itself. The numbers start to really show themselves, and we could actually see the stock market roll over and crash. It tried to a few months ago, but the plunge protection team came into the aid. Anyway, guys, I figured I'd let you in on this and show it to you and see what you think. Thank you guys for listening. Like and subscribe, and we'll catch you in the next video real soon. Bye-bye for now.